How much money can a 501c3 carry over? Super interesting question. There is a couple nuances around the rules. One, we have to go back to the division between private foundation and public charity. Let's start with public charity this time. Carryover implies that there was some sort of excess of revenue over expenses, and because of that, there's excess money being held in the bank accounts of the public charity, and then whether or not it carries over to the next years. It's actually okay for a charity to have excess revenue of expenses. They don't have to spend all their money in a given year and start literally from zero, okay? And that might give some solace to charity founders out there and social entrepreneurs and people of that caliber, because yes, you can generate an excess of revenue. We don't really call it profits. It's just an excess of revenue over expenses. And if you do that, don't worry, you haven't done anything wrong. You've kept the money for the next year to do the good work that you're doing. So there's no real issue with carryover balances from one year to the next, okay? So that's very important. One nuance point is that within the accounting structure of charitable funds, restrictions on funds plays out in an important way. In other words, even if there's an excess revenue over expenses in a given year for a public charity, are those funds restricted for any purposes that are specific? For example, if I donate money to a charity and I say for graduates going to the University of Southern California, I've restricted the purposes of those funds. So if my funds still exist in the charity at the end of the year, when the new year takes up, those funds have to go to exactly those purposes. You can't unrestrict the restrictions, if you will. Subtle nuance point, also related heavily to the accounting structures of charities, and just be mindful of that. Okay, on the private foundation side, carryover is totally acceptable because you only have to give away 5% of your fair market value of your assets. In addition, which I think is also relatively interesting, is carryover not from the actual 501c3's viewpoint, but from the donors giving to these 501c3s. Donors are allowed to get what they call a tax-deductible contribution or charitable deduction on their individual tax returns when they give money to a recognized 501c3. If you give to a private foundation and it's cash, you can deduct up to 30% of your adjusted gross income. If you give to a public charity and it's cash, you can deduct up to 60% of your adjusted gross income. Now the question is, what happens if you give more than the 60% or more than the 30%? And this is where this question is interesting. There's a 5-year carryover rule which says that if you give more, to the extent in subsequent 5 years that you can use that deduction against adjusted gross income, it carries over.